Welcome to the front lines. I'm Lyndsay Malchuk. We're in a moment where precious metals are no longer the quiet corner of investing. The system is stretched. Central banks are circling back towards easing, and investors are trying to read a market that keeps shifting under their feet. And when the landscape gets this tense, you turn to people who can actually read it. That's why I am sitting with Florian Grummes, founder of Midas Touch Consulting. He has spent decades breaking down the signals behind gold, silver, and mining stocks with a clarity most analysts can't match. When things get uncertain, his voice carries weight. So welcome to the show. Thank you.
Thanks for having me, Lyndsay. It's a pleasure to be here.
It is. It's a beautiful day here in Dubai, and it's a great day for a conversation. Let's dive in.
Yes, of course.
Okay, well, right off the bat, you have been calling for consolidation for precious metals for quite some time. My question is, what are investors getting wrong right now about that phrase?
Well, usually investors always tend to be either extremely impatient or tend to do not enough work. So usually I see those two extreme camps. And I think we're still in a phase right now where people want to be a little bit patient. Usually these consolidations in the precious metals can take a few weeks. The last one actually took 4 months. I don't think it's time to rush back into especially the more speculative sectors like the mining stocks. However, with prices slightly above $4,000, we might have seen already the low of that pullback and consolidation, but I expect a few more days and weeks here of basically sideways trading.
Well, what goes up must come down, goes sideways and every other way. So
kind of, yes,
yeah,
exactly.
That's exactly it. Well, central banks, they look like they are actually preparing for easing, whether or not they say it or not. So how does that change the setup for silver and gold?
Well, in the big picture, gold and silver are in a secular bull market. So first of all, that means any dip, any pullback is your buying opportunity, especially when we talk about the physical metals. And we've seen quite severe stress actually over the last few weeks, especially in the crypto sector, but also the general stock market pulled back a little bit. And I think the markets are basically forcing that the Fed will cut rates again in mid-December. At least that's, I think, what's going to happen now. And if you look on a global perspective, most of the central banks are already in easing mode. Most of the central banks are somehow expanding their money supply. And I think that will continue. And that is the big scheme overall. I believe we are in a cracker boom, especially the Western financial system. But actually, the same is true for China. It's all built on a house of cards, on credit expansion constantly. In a fiat money system, that's what you need. And hence, I think it will just continue. And most likely, the next round of quantitative easing, I'm not sure if it will be announced officially by that name, but somehow I think that will really put us back on a very extreme inflationary path. And let's see how this all plays out. But investors need to have their hands on gold and silver because that's the only protection, basically.
Well, that's the thing, is that gold goes one way and then silver hesitates and then the mining stocks, they all lag. So what's that really actually telling us right now?
Well, silver has shown up to the party over the last few months. Had a massive run, broke out to new all-time highs. 54.45 is, I think, the new all-time high right now. It's been breaking out. It's a huge cup and handle pattern, and the breakout is basically confirmed. It just takes a bit now here, maybe a little breather. But I think silver is outperforming gold going forward from here. And we've seen something similar in the last 2 years of the 1970s bull market, when silver went from $2 to $50. And we've seen it also in 2010 when silver finally started to catch up with gold violently, and it went from $17 to $50 within 8 months. And I think we are in a similar situation now. The gold-silver ratio at around 80 is still telling us silver is severely undervalued against gold. And hence, I think going forward, silver is probably taking the lead, and most likely will break out to new all-time highs rather soon. And using that big cup and handle pattern, I have a price target of at least $100 over the next 1-2 years, I guess.
Wow, what a wild ride it has been for sure on that one. Now, I know that seasonality keeps popping up in all of your work.
Right.
What is it showing you right now that the market seems to actually be ignoring?
Well, I mean, there is, as you well know, this typical sell in May and go away seasonal pattern for the general stock market. And the gold market also has a well-established pattern, especially over the last 17 years. For some reason, the turning point, the low, the start of the next leg up basically usually came in always around mid-December at the last FOMC meeting. And it looks like we are in a similar setup again this year. You always need to bring a little bit of flexibility and open-mindedness to the table when it comes to seasonality. So you cannot nail it on the day exactly, a few weeks more or less. But overall, there is a clear pattern, and that is usually start of the last quarter is rather weak. And then the turning point for gold comes around mid-December. And then you have January, February, March, very strong months for the precious metals, especially for gold, but also for silver and also for the mining stocks. And this is all nowadays driven by the strong physical demand that shows up before the new year in China, when they have all these festivities and gifting basically physical gold. So that's a big driver. And I assume, I mean, right now it looks like we're going to see maybe another 2 or 3 weeks of consolidation, and then mid-December, around the last FOMC meeting, probably start of the next leg up in the gold price.
Oh, now, Florian, what we're seeing is the financial system is actually incredibly stretched right now, very stretched. Where do you see the actual pressure building, and what should investors of precious metals, what should they be doing before everyone else even notices?
Well, I mean, there is, as you said, quite a lot of stress points in the system. And I mean, this is going on over the last 25 years already. It's piling up, so to speak. We've seen massive stress in the repo market a few weeks ago. The Fed injected 125 billion over less than 4 days. I think it's 3 weeks ago. As we already said, most likely they will lower interest rates again in mid-December. You see stress in the crypto sector, which could spill over into the general stock market. If strategy has to be removed out of all these indices, which is basically a kind of a Bitcoin crypto proxy, that might create a lot of stress because there's so many leveraged players in the system. And generally speaking, way too much leverage in the system. And I don't think they can allow the system to break down. So what will happen is more money printing, and probably on a scale we have never seen before. Mm-hmm. And, precious metals investors should, first of all, look at the gold price itself, because gold is always sniffing out everything rather early. Yeah. Mostly earlier than everything else. So gold is always a good indicator because it's a worldwide market. It's not a 24/7 market, but at least from Monday to Friday, the whole world is trading it. And it gives you a very good indication where things going. And for example, I mean, I just saw a chart this morning showing that it's not only the central banks who are buying gold like crazy, but it's also Tether, who bought actually more than any other central bank over the last quarter. And it tells a lot if a big crypto company actually is using their revenue to buy physical gold. Absolutely. Yeah. Absolutely.
Well, it's been such a great conversation. Thank you for sitting with me today in beautiful Dubai, and we look forward to having you back.
Thank you very much. It's been a pleasure.
Again, that was Florian Grummes, founder of Midas Touch Consulting. To take a peek at his perspective that hits before the market admits what is actually happening, head to MidasTouchConsulting.com and follow the signals he tracks. So when the next move in precious metals lands, you'll be positioned to understand it instead of scrambling to keep up. I'm Lyndsay Malchuk with Appleton Media, and this is the Market Frontlines. We'll see you next time.